We're going to go over the numbers on a Class A property in the Lake Nona area where you have A schools, and this happens to be in a golf course community of Eagle Creek, almost literally a stone's throw away from the economic center of the Lake Nona area, which is the Medical City area in Laureate Park. This home was built in 2010. It's a end unit townhome, 3-bedroom, 2-bath, 2-car garage in, again, the Eagle Creek subdivision at 10415 Belfry Circle. So don't let these numbers confuse you too much. It's a very simple layout. I'll show you how to read the sheet. On the far left here, we just have our basic inputs of information that the rest of the sheet rather translates into a return on your money. Now, the money can be two things. It can be a cash purchase, and that's what we show here in the middle column here, the numbers that break down for a cash purchase. And then on the right side here, we show what the numbers break down to if your money is the down payment on the purchase. And in this case, we're using a 20% down payment. Now, keep in mind, if you have more than 4 loans, then you're going to be looking at most likely a 25% down payment. And if you're a foreign investor, then you're going to be looking at a larger down payment and different finance terms. You can get with the agent that has this listing if you want more information, or maybe you're an investor and you're looking at other properties that you'd like a similar translation for, and we'd be happy to help you with that. But as far as this house is concerned, let's kind of break this down. So our inputs are on the left here in these gray fields, and then in the middle section, those are the returns for a cash purchase, and then on the far right here, we have the returns for a finance purchase. So the inputs that we're using is a purchase price of $299,000. If you are getting financing, you're going to be north of about $3,000 of closing costs. If you're doing a cash purchase, it'll be a lot less than that. So we're just kind of using a ballpark figure there. The income assumptions we're making is a conservative $1,800 monthly rent. There is potential that you can get a little bit more or less than that number there. And of course, we're not collecting every day for the first year. So we're just assuming that we're going to have a 3% vacancy rate. We have our expense assumptions here at an 8% property management fee, unless you're going to be managing this yourself. In most cases, our investors are handing it over to our local property management company that specializes in the Lake Nona area, so that you're not dealing with the pets and toilets and so forth. So they're going to place the tenants. They can manage the property for you, so that you're not having to deal with that. It's an 8% management fee on rents collected. 100% of the first month rent goes to the management company for finding a new tenant and screening them properly. We're going to assume about a 1% of the purchase price is your tax rate. We're going to assume $2,000 insurance, $309 HOA for this property, which includes the double gate. It includes another pool in the subdivision there, and there is also a new rec center that's been built. You have the clubhouse on property. You also have the gym and the new kids pool. The amenities in this subdivision are pretty robust, so that's what your $309 per month covers. Also, the exterior maintenance on the property there. The maintenance cost, of course, we want to allocate some costs that we're collecting in the rents to cover annual maintenance on it. This home is relatively low maintenance. The carpeting on the inside the property is minimal. I believe you only have that in some of the bedrooms. Most of the home, though, is gorgeous tile floors, and you have not much maintenance on the interior, and of course the HOA covers the exterior. Then the debt on the property, we're going to assume for those of you that are considering financing that we're putting 20% down on a 30-year term at a slightly higher rate because it's an investor loan. So at the end of the day, when you consider your cash purchase of $302,000 out of pocket, we have a gross rent minus a vacancy, netting us about $20,000, let's call it $21,000 of annual rent. We subtract from that the expenses, and you net about $8,000 on your cash, or between about 2.5–3% on your cash. So if you're looking for a place to park your money in an asset, a tangible asset, in Class A area where you have a lot of owners versus an area where you have a lot of renters that has very little appreciation, this is a great neighborhood to park your cash if you're looking for a little bit of a haven with some tax benefits, and we'll talk about that in a second. Your net cash flow on this property is going to be about $677 per month on a cash purchase. Again, mailbox money, you have local property management in place if you need that. we can take care of that for you. If you're financing the property, you can be a little bit of negative cash flow here, but we'll make up for that with our tax benefits. So the way that breaks down is if you're putting 20% down with closing costs, you're going to be at about a total out of pocket of about $62,000, let's call it $63,000, and a negative $464 per month from a cash flow perspective. And that's after our debt assumptions and then our expenses on the property that we already talked about. But when you consider that in real estate investing, you're benefiting 4 different ways, then the net effect at the end of the year, if we're comparing apples to apples or this investment to another paper alternative out there, we're actually doing very well after tax. So the 4 ways that you're going to benefit on rental properties is, number 1, you have the tenant paying down that loan for you if you're leveraging the property. In this particular case, you have about $4,200 of that loan being paid off that first year. So you have to consider that benefit, and that, of course, is the tenant indirectly paying your mortgage for you. Then we also have a total tax credit or benefit that year of about $16,000 when you consider your depreciation and most of your loan payments being interest that year that you get to write off too. If you are looking for some tax relief, this could be a good option for you. And then the last thing that we're looking at is the cash flow to offset those positive numbers there. And to be conservative, we're assuming that the property is not going to go up in value $1. So if you want to play off the appreciation assumptions that we've been seeing in this area as of late, then your actual return is going to be way more than what we're showing here, which is about a 9% return on your down payment of about $63,000 or your cash out of pocket there. So after tax benefit on this property, even if you get some negative monthly cash flow, you're actually in a positive situation when you consider what you're getting net at the end of the year after tax. So we aren't, just to qualify that, we aren't tax professionals. We don't give out legal advice. We're not lawyers. So please consult your professional for legal counsel and for tax advice. So again, whether you need property management services or you are looking for other properties that you're considering for cash flow and you'd like a similar breakdown, or maybe you're looking for asset protection, or you're looking for some tax professionals, or you're looking for a mortgage broker, whether you're a domestic investor looking for an investor loan or a foreign investor looking for foreign financing, you can come to us and we can refer you to the right place to get that professional advice. So anyway, that's our quick summary on this property. If you have any questions, contact the listing agent. We'd be happy to help you. Thanks.